A recent report has shown that the Nigerian National Petroleum Corporation earned a revenue of 4.61 trillion naira and spent 4.52 trillion in 2020. The report, developed by Budget in partnership with Oxfam, reviews the 2020 performance of the oil firm. According to the organizations, Nnpc'S revenue in 2020 showed a 23.8% decrease from the 6.05 trillion naira it earned in 2019. The report says the expenditure of all its subsidiaries stood at 4.52 trillion naira. While total crude oil production suffered an 11.61% decrease from the 734.27 million barrels produced in 2019 to the 649 million barrels produced in 2020.
And the internally generated revenue income of the Nigerian Investment Promotion Council is reported to have hit 3.06 billion naira in 2020. This represents an increase of 92% compared to the 2019 IGR of 1.59 billion. The increase also represents a 108% jump against the 2020 budget of 1.47 billion naira. The report shows that between 2016 and the first half of 2020, NIPC remitted 5.82 billion naira out of a total of 11.91 billion IGR to the federal government's Consolidated Revenue Fund. A breakdown of the IGR income shows that the Commission generated 296 million in 2016, 29 million in 2017, and 5.5 billion in 2018, 1.52 billion in 2019, and 1.41 billion in 2020.
And the federal government has asked all ministries, departments and agencies to submit their 2022 budget proposals by tomorrow, September the 5th. In a circular from the Budget Office, the MDAs were asked to make their 2022 budget proposal submission online using the Building Information Modeling and Management Systems. Well, this deadline is to enable the government commit to submitting the 2022 budget proposals to the National Assembly this month in full compliance with the Fiscal Responsibility Act of 2007. The Budget Office reminds the MDAs to include the revenue sources and not just expenditures in their budget submissions.
Okay, joining us to examine these issues is a RISE analyst, Dr. Sam AMADI, who is an associate professor of law. Very warm welcome to Newsnight. NNPC, only a fortnight ago, declared a profit of over 400 billion naira, the first in history. And if you compare that against what it spent on subsidies, you wonder where this profit is coming from.
Well, if you look at the breakdown, you see that the NIPC spent almost, apart from about 900 billion naira, difference between what it earned and what it spent. And it spent mostly on refinery maintenance. And, the question is, today we're talking about government not getting involved in refineries. That's the argument before 2019 election. And NNPC is going ahead. They're talking about the refinery in Port Harcourt, Kaduna. And the logic they have said is, look, it's more strategic that the government maintains, public refinery. It is true that the Dangote refinery, and of course, I want to take a stake. So the question people ask is, why do we continue to repair the refineries? But the other argument is that maybe we should. Maybe we need to have some public refinery. But the question is, what would they do different with the refinery? Again, if you look at the subsidiary, those are dealing with gas, they made more profit. They probably transaction sales. But NIPC and the subsidiary spend so much money in a manner because the NIPC is allowed to spend and then transfer the remainder. So the question people have always asked is, how do you instill more control, cost control in NNPC? If you look at NIPC, they did fairly better. This year they spent less, arguably because they didn't have too many conferences to organize for trade investment. So the question is, why is NNPC more audit to find out not just that it's not well spent, but whether some of those spends are not themselves self-fulfilling prophecy, because you have the money, then you create expenditure. So if you are spending almost like almost everything, I mean, this is a difference of less than $1 trillion.
Well, just recently we did see the president put pen to paper and pass that PIB, now the PIA. And of course, as we move from the NNPC, from the corporation to a limited company, the GMD was actually at the National Assembly during the course of the week. And one thought that, with the new limited company, the issue of subsidy would not be a part of, the budget. Well, he's saying, come 2022, there's still going to be subsidies.
So there's still control.
There's still some level of control. So how do we juxtapose that with the PRA, with the independence that we're talking about?
I think there's going to be a transitional period. The critical problem is that Nigeria wants to eat its cake and have it. We want to deregulate. We want to have a private sector driven.
But they don't want to let go.
But at the same time, the impact, the rate shock, the impact that will happen, they want to kind of manage it in a way that there will be some transition. So they're going to be paying subsidy, which they ought not. And you might be surprised, it might become, the problem with this kind of the default mode is that it can self-perpetuate itself so that it keep paying even when it shouldn't pay. But ideally, if we're going to go into PIA, it suggests that you're going to have a company that's going to be a commercial entity. You're going to have the Nnpc Limited will probably compete on neutral ground, on anonymous ground, open ground, level ground, with other entities in the market. And so the question of maybe subsidy may not arise. But the problem is that the subsidy focuses at consumption, looking at the difference between the price that the petroleum product will sell and whatever is considered affordable. So the economics of general inflation, economics of income, employment, socio-economic factors may force government to find a way to still subsidize petroleum product. But the question is, how will be the most efficient subsidy regime that does not undermine the efficiencies that you want to get through the PIA?
Okay, let's quickly look at NIPC, the Nigerian Investment Promotion Council. Well, an agency of government like that just doing turnovers or profit of 1.56 billion and the rest, and you just wonder if that's their mandate. Their mandate is to attract investment into the country, whether pandemic or no pandemic. We still hear of world manufacturing cars going to Ghana. 3 of them recently are going to open their assembly plants in Ghana and the rest. So what is the essence of making profit? Profit from where? What investments have you really attracted?
I think that's the same thing people talk about JAMB. When JAMB posts those huge numbers, people say, well, are we improving the quality of testing?
Yeah.
We still have issues around even the logistics of JAMB examinations, their quality, their control, integrity. And so the question then is, there's a sense in which it might be a perverse behavior, when these agencies begin to focus more on revenue. And that might be signaling from government. This government is concerned about cost, about revenue. If you watch the instruction from the budget office about budget, they say, show us revenue.
Yeah, not expenditure.
How
are you going to generate the money?
The cash crunch, the revenue crunch is probably putting more incentive on revenue. But again, like you said, NIP is about investment. If you look at, for example, what Ethiopia did with the shoe industry, China, they went to China, they got a Chinese company. Ethiopia used to have about 800,000 workers on their shoe industry. But with that investment, they moved up to 3,000 in less than 2-3 years. So the question is, can we point to industries that have come into this country using our competitive advantage, whether it's in agriculture, whether it's in cassava, whatever, and they have expanded to now employ my people? That's the kind of report card that
NIPC should be showing us. Go to Ari and the rest, where the World Bank has invested millions of dollars, but unfortunately, no roads in Ari, no roads in Aba, and you wonder, what are the governors been doing? The investment portfolio cannot be strong. Yeah,
they bring in foreign investors and showing them where to invest, and they're matching them with local enterprises and local opportunities where you are sure they'll be scaling up. So they will grow, more employment, more revenue, more IGR coming to and more tax. So primarily raising this 4 trillion, could speak to some level of control in terms of expenditure, some level of prudence, but really one can argue that's not the mission, that's not the focus of an NIPC.
Absolutely.
Yeah,
well, the ease of doing business has to also improve, really, if we need to see that foreign direct investment into
and
Nigeria.
I think we're improving ease of business, but we're not getting the real investment, and because we're not improving security, infrastructure,
Absolutely.
policy, because ease of doing business is just one fancy note
Absolutely.
in the whole mix of investment.
Dr. Sam AMADI would have to say thank you so much for joining us tonight on the program.